Well, welcome back, everyone. Markets continue to be exciting in FANG earnings, and of course, we are moving into an OPEX and a Nasdaq rebalance. Now, today in markets, I was able to do live trading again in front of members of the active trader room. And for all of those of you that are new wealth charters that have gotten that access to the active trader room, you were there too. If you weren't, well, should be logging in. Well, we've got a day today that started on the heels of insights from earlier in the week, where we're likely going to be in a little bit of a pullback state, coming down, defrothing, and then finding a support floor that may act as a bounce area. Well, the headline is all about, I don't think we've seen enough of the froth come off yet, a little bit more to go, and we are moving into a day where volatility can expand. Now, that means shorter term trading strategies are what I'm employing. So, for example, today, we came into the day, and I'll show this to you on a live chart in a second. Of course, this is just a snap, and that's a snap of my dome for today. I was able to gross a little over $550, as you can see, and past performance is not an indication of future results nor track record. However, when I trade with the indicators, I'm able to do better. When I trade against them, it doesn't quite work out as such. Now, nice little move on the market down today. And the indications gave us lots of forewarnings. Let's go and actually look at that in depth live right now. So I'll take you to my live wealth charts. You can see my dome on the screen over here, and you can see that we're still ticking away into the end of the day. It's almost time for the futures market to close. It's just about a dozen minutes away from 5 p.m. as I record this Eastern time. Now, what you see on the screen right now is a marketplace that has signals that support a continued downward move. Now, that's looking at a hourly chart and a 5-minute chart. The strategies that I employed for shorting today, both in the morning and the afternoon, I'll kind of discuss the afternoon for you right now as it's closest to now. Well, you got the things that Rob taught us last week at the summit that you've heard me expound on as well, and that I'm going to be teaching a lot more to for all of those of you that are wealth charters, both new and long-term wealth charters, this Saturday in an accelerator class. Stay tuned for the details coming out on that tomorrow. Bottom line is the tutelage and the insights lined up. We got a champion cross sell zone on the 5-minute chart right there on the 12:30 p.m. 5-minute bar of the S&P E-mini futures, and that's what I was trading. You can then see from the champion cross sell zone with the red dot, obviously the shadows there, we got a champion trend sell zone signal, and that happened on the very next bar effectively, or a couple of bars after, apologies. We also got a wealth signal. That orange dot up there above the candle is a wealth signal, sell or short dot. Now, as prices continue to come down, you notice that there's a little potential divergence there. That divergence did not break when we got the wealth signal. We pulled back up into the champion cross sell zone. We got a red dot, which is a negative momentum shift, pushed right back down, and it still didn't break. In fact, we got a positive momentum shift, and on the very next bar, we got a breakout forecaster, not to mention the incremental wealth signal short dot right up there. And it was on this bar right over here where we had a higher probability that things were going to fall apart, and the market got sticky. It didn't quite want to go down, down, down. Now, we continued to remain largely underneath, with exception of one bar, we remained underneath the champion cross sell zone and, of course, the champion trend sell zone. And we got one of Rob's IRB strategies firing off a sell strategy. We saw price come down. Markets got sticky again. Got another IRB and negative momentum shift. But we had put in a positive momentum shift here. It took a while to grind this out, and then you get the range breaker signal, which is a cyan dot that I'm tracing on the right-hand side of your screen there. And, of course, we come down, and what have you heard Rob say? In a downtrend, breaking below the green dot can create the opportunity for a fresh short or a re-entry short. Boy, did that work out quite well, and down the hatch it went, back into the champion cross sell zone. Perfect, coming right back down. That offered another reshort, and down to lows. Now, into the very last half hour of the day, we did get a grind up, but not enough to recover anything. If you take your view to the hourly chart, and I'm going to take my dome off the screen here so you can kind of look at the 4-hour chart, and then I'll bring up the daily chart. What does this all mean into tomorrow's OPEX and Nasdaq rebalance? Well, the Nasdaq rebalance is supposed to be trading live on Monday, but there may be some after hours fireworks tomorrow. And of course, it is options expiry as well tomorrow, and a fairly big one. So when we look at the price action on a 4-hour chart, it tends to, with this toolkit, project out 3 to 5 days. Okay, now it can be a little less, can be a little more, of course. What we knew going into the high point, which presented right over there, as you can see, 19th, 10 a.m. Eastern Time, 4-hour bar, was a negative divergence, negative momentum shift, even though we were in a buy signal state, which we still are, by the way. We don't have as strong a buy signal state, but it's still there. When we got up to that area, we also recognized that we were running out of fuel. We were using some high-octane bullish fuel, and the fast spike started to come down, telling us that we're running out of it. And that followed by the green line coming below the top of the channel, and down the hatch the market went. Now, this was an opportunity for profit taking on longs on the ride up, and or day trading like you saw me do for those of you that were in the active trader room, and of course those that are new Wealth Chart members that have gotten access to the active trader room. Well, you saw me doing some of that live trading today on the short side, not on the long side. Okay, we came into the market with an expectation that there is some down to go, and again on that 4-hour chart, it was sticky, right? There were some sticky moments, even pre-market. But then we saw the downward action. Now, we did come down and perforate the champion trend buy zone on that 4-hour chart. And I'm going to talk to you about the importance of that in relation to what the daily chart still says. We're still in a strong upward trending market. We're just defrothing. And a dip into the champion cross buy zone, perhaps a little more weakness, call it another $2, maybe $3 lower on the SPY, 20 or 30 points lower on the ES. Well, we engage then with the top of the champion cross buy zone on the daily chart, and there could be a bounce right off there. There's a higher probability for at least it to slow down in the decline. If you take it up a time frame and you look at the weekly chart, you know, this is nothing, not even a scratch really, according to the weekly time frame, which again on the week so far has got another breakout forecaster line. So we'd have to literally come down to 44, 50s on the ES and break through that to kind of debunk anything. And that's a long ways away. Now, it's 120-ish points away from where we are right now. So needless to say, the weekly chart, the daily chart, still overtly more bullish. But as you get down to now and look at the bigger time frames for key signals, there's still a little risk remaining. The 4-hour chart then is controlled by the 1-hour, and the 1-hour tends to project 3 to 6 hours out. Could be a little more, a little less. It's still in a sell signal state. It is oversold. We do see that. That's clear. But the sell signals are still very clear as well. So even in the after hours or overnight or pre-market, if we push up and we see the S&P E-minis get into that champion cross sell zone, getting all the way back up to the 45.80s, for example, the likelier outcome is it to push back down again. Not certain, but likelier outcome. And intraday strategies in a market like this is what we are utilizing to trade, as you've seen again, using my dome right over there. It has been more about intraday strategies in the back half of the week. The front half of the week, we called out likely a rise, and metals, mining stocks, base metals, the Nasdaq have an opportunity to rise. And that was a great little run. But now we're in the spot after Tesla's earnings were reacted to by the market negatively, coming into the market day today with the technical signals already telling us. Well, what do they tell us? Okay, you've got a market that's effectively got 2 big negative momentum shifts coming from highs made on the 19th yesterday. And you've, of course, seen the market kind of flatline in the overnight session and come into the morning today with a very thinned out champion cross buy zone. It then did flip into a sell zone on the hourly chart at 8 a.m., but there was some stickiness there. When that green dot broke on the next bar, the 10 a.m. Eastern Time hourly chart bar, well, that green dot breaking was really a bigger signal on the hourly chart that there's probably going to be downside risk. And remember, there was still some stickiness. I did some trading in the morning and some trading in the afternoon, and overall it was all short side trading. Overall, that downside played out as expected, with potentially a little bit more to go before we find support and then bounce. And again, 20-30 points lower on the ES, $2-3 lower would be what I'm estimating. And again, I can't tell you that that's going to be accurate or not, but I can tell you that when I trade with the technical signals and the toolkit that I'm going to be teaching more on the accelerator class on Saturday, well, guess what? I'm going to be going through it with a fine-tooth comb with you to help you learn these tools and strategies, which are exclusive to wealth charters. Look, great day today. Goes a long way to paying for my Wealth Charts membership yet again. And I'm looking very much forward to, sharing with you my insights on how the tools come together in different markets, along with how to use all the powerful scanning technology on Wealth Charts. And of course, how does that imply where the market's going to go in the week ahead? So speaking about strategies for the week after next week, I'm going to take you back over here, get my dome off the screen again, and take you right back over here to the daily chart. While the daily chart largely remains above the upper 4400s, we're still in a state where any dip is likely going to be pushed back up. I'm expecting some volatility next week. So it would not be off base in next week's action for us to see some sort of a dip in towards the upper to mid 4400s before the next potential move up. But counting on a full-on breakdown, we don't have the weekly or daily chart signals that would support that just as of yet. Nasdaq rebalance can add volatility, OPEX can add volatility, and of course the mega cap earnings next week are going to be another big part of overall traders' decision making, and that's all happening largely in the after hours. Looking forward to being with you this weekend for the big accelerator class that's going to start at 10 a.m. Eastern Time. Look out for an email at some point tomorrow and again on Saturday morning. So that's going to happen Saturday morning at 10 a.m. And that will be July the 22nd. I want to make sure that that's clear. I hope you enjoyed this video, and I hope you have a wonderful rest of your day. Looking forward to seeing you in videos just like these in the near future, and wishing you and yours all the best into the evening and a great trading day to start off tomorrow. Bye for now, folks.